can Bitcoin really hit $500,000?
Yeah.
Or are we, staring down the barrel of a major correction, maybe all the way back to 70,000?
Well, that is the big question. But first, as always, we wish you good health and, of course, the steady accumulation of more assets.
Today, we're doing an intense deep dive into the most dramatic predictions for Bitcoin's price all the way through 2030. This isn't about guesswork.
Not at all. We are using cutting-edge expert analysis. We're looking at current market movements, the latest technical indicators from late October 2025, and the critical factors that drive all this volatility.
And our mission here at Smart Finance Hub is simple: to cut through the noise and give you clear, actionable knowledge.
Exactly. We want to equip you, the practical investor, with the insights you need to understand the real risk and the astronomical potential reward in this asset class.
Okay, so let's start at the very beginning. For anyone who's maybe new to this, what exactly is Bitcoin in practical terms?
At its core, Bitcoin is simply digital scarcity. It was launched back in 2009 by, the mysterious Satoshi Nakamoto.
Right.
And its purpose was pretty straightforward: a peer-to-peer electronic cash system.
Which means cutting out the middlemen, like banks.
Precisely. No intermediaries, all the transactions are just recorded on a public ledger, the blockchain, and it's all secured by a global network.
But the key detail, the one every investor focuses on, is the scarcity.
That is the most crucial part. There's a hard cap. Only 21 million Bitcoins will ever be created, period.
And we are getting really close to that number.
Oh, very close. Over 93% have already been mined.
Yeah.
And that scarcity is locked in by something called the halving mechanism.
Which cuts the creation of new Bitcoin in half roughly every 4 years.
You got it. So the supply squeeze is programmed to continue no matter what demand does.
Okay, so that sets the stage. Limited supply. But demand is what really moves the price. What are the big forces we need to watch?
There are really four main drivers. The first is obvious, supply and demand. But under demand, the big one is adoption.
So just more people and companies using it?
Yes, but not just individuals. We're talking major corporations, institutional funds, even governments. The wider its use, the higher its value.
The second one feels like the most chaotic: macroeconomic events.
Absolutely. When central banks mess with interest rates or inflation gets hot, investors start looking for alternatives.
And they see Bitcoin as a hedge against, their national currency losing value.
That's often the play. Then third, and maybe the most unpredictable, is the regulatory environment.
Right. A single government announcement can change everything.
It can trigger massive rallies or massive crashes. Clarity boosts confidence. Bans create panic.
And finally, you have the pure psychology of it. Market sentiment.
That's the emotional roller coaster. It's the fear of missing out, FOMO, and then fear, uncertainty, and doubt, FUD.
And that's what creates those insane price swings we all see. Okay, so to understand where we are right now in late 2025, we have to look back. It's been a wild ride. A high of $32 in 2011, then that famous peak near 20,000 in 2017.
And then the brutal 2018 correction that followed, an 80% drop. I think it's so important to remember that because it really defines the risk here.
Absolutely. Massive gains, but also the potential for just gut-wrenching losses.
But it recovered. It hit new highs in 2021, and then again, another big one in March of 2024.
And that set the stage for the real breakthrough we saw last year.
Let's talk about November 2024.
The U.S. presidential election. That was a huge moment for crypto.
It really was. Now, regardless of anyone's politics, the market saw the winner as crypto-friendly.
And that just opened the floodgates.
An enormous institutional and retail rally. That enthusiasm was the key factor that finally pushed Bitcoin over the six-figure mark, over $100,000 for the first time.
But that euphoria didn't last, which brings us to right now, October 2025. And it feels like we just hit a sheer cliff.
We did. Just weeks ago, on October 6th, Bitcoin hit a brand new all-time high. It touched about $126,000. Everyone was looking at 150 next.
But then geopolitics just slammed on the brakes.
Hard. On October 10th, the U.S.-China trade conflict suddenly escalated badly. President Trump announced these crippling 100% tariffs on Chinese tech.
And China retaliated.
They retaliated by limiting exports of critical rare earth minerals.
Okay, wait. Why does a trade war over physical things like minerals matter so much for a digital asset?
It's a great question. It's all about risk appetite. When that kind of global economic turmoil spikes, investors flee from high-risk, volatile assets like crypto.
They run for safety.
They run for safety, to the US dollar, to gold, and Bitcoin is very liquid, so it gets sold off fast in a panic. That shock sent the price tumbling down to around 104,000 almost overnight.
So even with all this adoption, a big macro shock can still just pull the rug out. As of today, October 22nd, we're trading around 107,000, but that shock is still lingering.
It is, even with the price up over 60% for the year. And now we have to look at what the charts, the technicals, are telling us right now.
Right, so let's unpack that. What's the outlook for the rest of 2025?
Well, the short-term picture as of October 21st is it's pretty pessimistic.
Okay.
The price tried to get back over that $114,000 resistance level, and it failed. Now it's testing support at 107,200.
And the momentum indicators.
A lot of them are pointing bearishly. Things like the moving averages, the MACD, the parabolic XR, they're all flashing warning signs.
Hold on, let's break that down. What does it actually mean when you say the MACD is pointing bearishly? For the listener, what is that?
Right. So the MACD is a momentum indicator, and when it swings bearishly, it's basically signaling that the buyers have run out of steam.
So the sellers are in control.
The sellers have taken control of the momentum. The market is it's losing its upward push.
And what's the overall mood? The sentiment?
It's fearful. The fear and greed index is sitting way down at 29. A low number like that means deep pessimism. So we're watching support at 107,200 and then a lower level at 105,100.
So what's the most likely path for the next few weeks then?
Given everything, the trade war shock and these bearish signals, the most likely short-term scenario is a break below that 107,200 support level.
So you could go lower.
We could easily see a drop to test 105 and, potentially slide back towards that big psychological number of $100,000.
And that really sets the stage for the different possibilities for the rest of 2025. You've got three main scenarios here.
We do. The base scenario is kind of the most straightforward. It sees a moderate upward trend, but it's capped by all this uncertainty. We'd expect Bitcoin to trade between, say, 100,000 to 150,000 for the rest of the year.
Okay, then there's the bull case, the optimistic scenario.
This would require some good news, a resolution to the trade war, or maybe a massive new wave of institutional money coming in. If that happens, you could see a late cycle breakout, surging up into the $160,000 to $230,000 range.
And then the one we have to take seriously.
Yeah.
The bearish scenario.
Right. If we get another big macro shock, or maybe a new regulatory crackdown from a major country, that could trigger a really significant retreat. We could see prices pull back into that $70,000 to $100,000 zone.
Wait, 70,000? That feels extreme. I mean, with all the institutional money that's come in since 2024, shouldn't the floor be higher? Is that big money really as jumpy as the retail investors from 2018?
That is the $100,000 question, isn't it? And what the analysis suggests is that while institutional money is stickier, they have rules, mandates. When overall market volatility spikes, especially during a trade war, they are often required to sell risk assets. So yes, even that institutional money has to de-risk, which is why that $70,000 to $100,000 zone is still a real possibility in a shock scenario.
Wow. Okay, this brings up a crucial question for you, the listener. We've talked about the pessimistic indicators, that fear and greed index at 29 and the short-term forecast pointing down. So what do you think? Is Bitcoin more likely to stay in that moderate 100 to 150,000 range? Or will it fall into that bearish 70 to 100,000 zone by the end of 2025? Go ahead and comment with your prediction below this deep dive.
And now let's zoom out. Let's pull away from the daily charts because the long-term case is where the real structural argument is. We're looking out to 2030.
And the forecasts for 2030 are just staggering. The range is enormous.
That spread tells you everything about the uncertainty and the potential leverage in this asset. So the low price scenario for 2030, that's between $50,000 and $100,000.
And what would cause that?
That assumes something goes really wrong. Major regulatory walls go up, or maybe some new technology just makes Bitcoin obsolete. It becomes a niche, forgotten asset.
Then you have the moderate scenario. This feels like the consensus baseline.
It does. That model sees Bitcoin stabilizing between 150 and 200. With, persistent hurdles that keep it from going completely parabolic.
Okay, and now the big one, the high price scenario, reaching up to $700,000. How on earth do experts justify a number that high?
This isn't just about retail FOMO. For Bitcoin to get into that 250 to 700,000 range, you need fundamental adoption by the world's largest pools of capital.
So we're talking about governments, pension funds.
Exactly. Sovereign wealth funds, major global pension schemes, insurance companies, they're really sticky money. If they just allocate a tiny fraction, maybe 0.5% of their huge portfolios to Bitcoin, the limited supply means the price has to explode.
It's a powerful argument. I mean, the data shows the average expert expectation for 2030 is already around 252,000. Even for 2026, it's over 170.
So despite the short-term fear, the long-term story is still very strong. Which brings us back to our listener, that 35 to 45-year-old investor. Why take on this kind of risk?
Because it's a scarce asset, with that potential for huge appreciation, but also for diversification.
That's the key investment argument. Historically, Bitcoin's price moves haven't been strongly tied to stocks and bonds. So adding a small amount can actually help your overall portfolio, especially when traditional markets are shaky.
Plus the inflation hedge argument, because they can't just print more of it.
Right. But we have to be extremely clear about the warnings in the source material.
This is not a sure thing.
Not even close.
It is
highly volatile, it is high risk, you have to do your own research, figure out what you can tolerate, and never, ever invest more than you are prepared to lose. The risk of losing everything is always there.
Let's also touch on the practical side of this market. The sources mention all these different services, which shows how complex it's gotten beyond just buying and holding.
Right. For example, some platforms let you use leverage, up to 70 times your position. Others have high-yield accounts promising, up to 40% returns on some assets, or simple things like crypto credit cards.
So the tools are there for high engagement and high risk.
Exactly. And that heightened risk makes the regulatory side of things absolutely critical for you, the investor.
You have to know who is protecting you.
It is paramount. You need to know which agency oversees the platform you're using. The source platform, for instance, is regulated in places like Italy and Switzerland, so your protections are based on those laws.
So whether it's the SEC in the US or an EU regulator, you have to know where your legal protections begin and where they end.
And the final disclosure from the sources makes this crystal clear. Do not invest in crypto unless you are prepared to lose all the money you invest. It is speculative, it is high risk, and if something goes wrong, you are unlikely to get protection or compensation.
So to wrap this all up, we've mapped out a potential future for Bitcoin that swings from a deep crash down to $70,000, all the way to a $700,000 target by 2030. And right now, we're stuck in these immediate headwinds with a potential pullback to 100,000.
And I think the final thought for you to consider is this fundamental tension. Bitcoin's history shows that these 80% drops, they're part of the cycle. Even with all the institutional money, a shock like that US-China event shows that stability is still an illusion. It can vanish overnight.
So how much weight do you, as a savvy investor, put on the short-term fear, the pessimistic charts, versus that long-term story of scarcity that promises these huge returns? Finding that balance is the key.
Always do your research, plan smart, and stay informed.
Thank you so much for joining us for this high-stakes deep dive. Now, we really want to hear from you. Go ahead and comment below with your prediction. Will Bitcoin end 2025 in that moderate 100 to 150,000 zone, or will the fear push it down into that 70 to 100,000 range? Let us know. Until next time, stay well and stay informed.